morning, welcome to Ainsley News. It's Thursday, 24th of September. So very volatile in the gold and silver markets overnight. But today we're talking about the $1 billion fine for JP Morgan for its manipulation of precious metals. Nearly 2 years ago, after we first reported it here, JP Morgan finally looked set to pay for the manipulation of precious metals market for their benefit. This from Bloomberg. JP Morgan Chase & Co. is poised to pay close to $1 billion to resolve market manipulation investigations by US authorities into its trading of metals futures and treasury securities, according to 3 people with knowledge of the matter. The potential record for a settlement involving alleged spoofing could be announced as soon as this week, said the people who asked not to be named because the details haven't yet been finalised. The accord would end probes by the Justice Department, the Commodity Futures Trading Commission, and the Securities and Exchange Commission into whether traders on JP Morgan's precious metals and treasuries desks rigged markets, 2 of the people said. A penalty approaching $1 billion would far exceed previous spoofing-related fines. Longer-term followers of precious metals markets will have observed these practices where, seemingly without reason, $1 billion of silver or gold is sold into a quiet market. On no level would that make sense if one was wanting to exit at the best price and maximise profit. As we've always suspected, it was indeed large banks spoofing the market down with derivatives whilst loading up on physical metal at lower prices. The Bloomberg article explains spoofing as follows. Spoofing typically involves flooding derivatives markets with orders that traders don't intend to execute to trick others into moving prices in a desired direction. The practice has become a focus for prosecutors and regulators in recent years, after lawmakers specifically prohibited it in 2010. While submitting and then cancelling orders isn't illegal, it is unlawful as part of a strategy intended to dupe other traders. As we noted back in April of this year, JP Morgan appeared the biggest participant in this scheme. This again highlights the thesis that JP Morgan are using the paper future trades on COMEX to suppress the price to amass their own physical hoard. Analyst Ted Butler estimates that JP Morgan alone now owns around 850 million ounces of physical silver. They own around half of all physical inventories and more than their client's paper short position. You can easily do the math from there. When they either want to or lose control, the world's largest bank unwinds the paper short, lets the price rip, and owns the biggest hoard of physical silver at those higher prices. We got a little glimpse of how quickly that can escalate in 2011 when silver neared $50 per ounce. It's not a stretch to anticipate that during the next financial crisis, silver could be JPM's get-out-of-jail-free card. The Bloomberg article notes this practice has been recorded for 9.5 years. Doing the math, that is around the time of the big takedown of the silver market from that $50 high in 2011. Probably just coincidence though. Yeah? Finally, for context, JPM recorded a $36.4 billion profit last financial year. A $1 billion fine is barely a slap on the wrist and likely pales against what they've made and indeed still sit on in unrealised value. The recent big correction in precious metals, silver in particular, is exactly what we saw in March when share markets crashed. Margin calls were triggered, as well as everyone jumping into the US dollar. The USD is now again surging, shares falling, and that strengthening USD combined with the sell-off of liquid assets such as gold and silver, they have had an incredibly strong run this year, for margin calls is a well-worn course. Reinforcing how the market is driven purely on stimulus, last night's rout was off a number of US Fed members talking down the economy, the need for fiscal stimulus, when that is locked up in an impasse in Congress, and talking down more stimulus from them. Let's be clear, we're not saying this pullback is over. We simply do not know. But just remember, if you'd bought silver at its March low, you'd be up 50% today, despite the 13% pullback over the last few days. Holders are seeing the bigger picture and probably topping up whilst on sale for gold and silver. Traders have seen that top of $40 in August, sold, and will be rebuying when they believe this correction is over. The former are probably celebrating the prosecution of JPM and the other banks. The latter may be lamenting the buying opportunities they presented being potentially removed. That's news for today. Remember, ainsleyBullion.com.au for all of our gold and silver products, ainsleywealth.com.au for all of our cryptocurrency products, and goldsilverstandard.com for our gold and silver-backed cryptocurrency built by Ainsley. We'll catch you tomorrow for more news.